MacLeod says in 2023 it will be all about the US dollar, authored by Alistair MacLeod via Gold Money on Zurhedge. In very quiet post-Christmas trading, gold was $1,815 in European morning trading, up $22 from last Friday's close. Over the same time frame, silver was up 11 cents at $23.82. By the last trading day of 2022, the dollar price of silver has risen 2.6%, while gold has fallen 0.8%. They comfortably outperformed bonds. 10-year U.S. Treasury bond price was down 17.2%, and equity markets S&P down 20%. With interest rates rising, many investors will be surprised that precious metals have held up so well. Admittedly, gold has fallen by 11% by end September, when bond yields were at their highest, but the falls in bonds and equities were somewhat greater at the same time. One of the factors which supported gold in the final quarter, offsetting moderate ETF liquidation of about 300 tons over the year, has been central bank demand, which the World Gold Council estimates to have been 364 tons by October, which included more recent purchases by China and others, adds nearly 300 tons. The Chinese purchase was confirmed in recent days by Mark Bristow, CEO of Barrick Gold, the world's second largest gold mining corporation, who claimed China had bought tons of gold around the high 200 tons mark. Why China has bought this gold when it has ample bullion additional to its declared reserves is an interesting question. So what is China up to? The answer probably lies with President Xi Jinping's recent visit to Saudi Arabia, where it was agreed that sales of oil would be paid in yuan, replacing the petrodollar with Petroyuan. According to Al Jazeera, Saudi exports to China are worth $33.4 billion equivalent, while its imports are $31.8 billion, so the net surplus for Saudi Arabia is $1.6 billion. The official communique referred to leveling up trade, investment, and financial cooperation. We know that China is keen to internationalize its markets, which is what investment and financial cooperation is about. The international section of the Shanghai Gold Exchange will be used by Saudi Arabia for its yuan to gold transactions. It's therefore likely that some of China's purchase of nearly 300 tons in recent weeks will be to provide liquidity to backstop this market. With regard to prospects of next year's gold price, it should be noted that the major factor will be the fate of the dollar, the US dollar that is. It appears likely that dollar oil prices will increase in the coming months, while foreign holders of dollars will continue to reduce their dollar exposure, which in the year to October declined by $3.8 trillion. But a rising interest rate trend leading to falling financial asset values and the Petroyuan replacing the US petrodollar, events could coalesce into a perfect storm for the US dollar. This is not how conventional analysts look at the gold price. They would argue that higher interest rates, if they occur, will drive gold lower, but that is an argument that denies the role of gold as money. Tell that to President Putin of Russia, who by cornering global hydrocarbon supplies probably has a greater influence on the dollar's future than the U.S. Treasury and the Federal Reserve combined. And this is by Alistair MacLeod via Gold Money on Zurhedge. Please leave your comments. Thank you for your support. Kindly support my Patreon account. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support and that you find all my content so interesting. You'll find the Patreon account details in the description box.